Hello, hello. Right, so gonna go over today's trading. We lost £180 and I think it was like 487 pips. So yeah, perfectly fine. It was within my model, and yeah, unfortunately, it just didn't go our way today. So let me just confirm. Yeah, £182 40p. Um, Pretty much the idea for this trade was. In the London session, we didn't quite take the previous daily high on Nasdaq or S&P. I took the trade on the Nasdaq. I'm just noticing this here. Hold on a minute. Let's just have a quick peek. Yeah, I think today is kind of just a massive sell-off. Pretty much the move was we had this 15-minute fair value gap tapped below previous daily low, and then from that we had the, what was it, 3 minute inverse displacement there, but ultimately it's not proper displacement because we've still got this candle here. Well, in hindsight, it makes more sense. And then I think it was a 1 minute fair value gap, which wasn't really a fair value gap. So that's one of the reasons the model didn't play out. I kind of used this breaker as an entry. But yeah, ultimately it wasn't a clear entry when you look at the fair value gap part of the model. And yeah, everything else other than that, trade down into a higher time frame point of interest, reaction off displacement after the inverse fair value gap, target previous daily highs. I was also looking at the London high as a potential draw as well. But yeah, so what happened was on the 1 minute we had this fair value gap form after we broke down. My stop was just above the inverse fair value gap today, just because the position sizing would have been 200 quid stop if I had it below, and to be honest, just as well I had it above and kept it at 180, so it doesn't make too much difference. As you can see, prices then continued to trade down into this further fair value gap here. So that was a 30-minute imbalance, or possibly an hourly. Yeah, that's it. The hourly fair value gap there. And yeah, we just pretty much continued to do this. And then this was just something that I marked up. I didn't take this. I was just sort of looking at potential opportunities, and I was going for this volume imbalance right here between the two bodies of the candles where the wicks meet as an entry, with the stop below previous daily low. And as you can see, we did get a bit of a reaction off this, but ultimately, if we just extend this out a little bit, ultimately we are just trading back up into another fair value gap. And as well as that, if you look at the range here, that is just equilibrium for a continued move down and further push down after that. So simple as that, really. And I was looking for other draws and liquidity. We've now traded down into this point here. We do have these equal lows as potential targets longer term, so I'm keeping that in mind. I'm looking at this I was looking at this literally a couple of minutes before starting this recording, just to see that could be a potential move, but it's not enough. It's a 1 minute inverse fair value gap. It's not enough. And yeah, ultimately I need something on a bit higher time frame. Similar story on the S&P. Target the hourly fair value gap, which is the 30-minute fair value gap that I marked out. Price has just sort of come down, bounced off it, and then continued down. What have we targeted here? So yeah, it's not as clear there, I suppose. Yeah, like this low, no, it's kind of swept and then pushed back up. But I'd imagine it's a similar sort of story here on the S&P. No inverse fair value gap around this point. And there's this, but it's not really massively clear. If you look at the 15-minute, yeah, I'm not going to take this. Although we do continue to press different points of liquidity, I think it's just best to leave it for today, and we'll just call it a loss at 182.40. And yeah, we had no red folder news today, so it's been not a little bit choppy, but continuing the no red folder. In terms of the actual position size for this trade that I took, I think it was 1 or 2 units, maybe five. It was 5, wasn't it? Yeah, so 5 units, £180 stop loss for 392 take profit at the previous daily high. If I wanted to close it at the London high, that would be about 300 quid profit, 297 there. So it's not a bad payoff if it does come through. That's a 2.17 to 1. So it was worth taking the risk. I'm happy I took it. It was in line with my model at the time. Maybe I could have waited a little bit longer, or just made sure that this was a cleaner fair value gap than what it was. Like, as you can see, price just sort of consolidates around this point. We did run about £70 profit at one point before just continuing to consolidate, and then the fair value gap gets used here. Sorry, you can't see that. Yeah, it gets used here, comes down, creates another imbalance, and that acts as the next point down. And then the inverse fair value gap gets run through, next point down into this higher time frame point of interest, or the 15-minute fair value gap gets filled. We then go straight down into the hourly fair value gap, and then continue down a little more. This is that volume imbalance on the daily chart I talked about. Slight move back up to equilibrium of this new range, and then continuation further down, going into the lunch hour. So yeah, I'm just looking at this at the moment. I don't really need to trade again, and yeah, I think we just need to wait for a better opportunity to present itself. Obviously, keeping in mind these equal lows down here as potential targets, not so much here. But yeah, that's pretty much about it for me today, and I'll be back tomorrow.